Hi and welcome to the Market Alert for Thursday, 31st of March. Unbelievable, another month gone by. But yesterday's headlines: bonds, bullion and black gold bid as Putin sparks stock skid, dollar dumps. Yeah, apparently they don't believe the ceasefire now. Putin's got something else up his sleeve, so that allowed the market to move lower yesterday. So much for all that peace optimism indeed. What did I say? It's all smoke and mirrors. Time to hate puts. What does this mean if you're new to trading? Well, it means put options, waiting for the next move up. Put options are a bet to the downside that the market will go down, and basically what it's saying is that we're expecting the market to continue to the upside, and I couldn't agree more. We've got war being waged and hyperinflation, and the stock market's going up because that's what they want. It's not about what should be happening, it's about what the elite want, and that's what they're actually pulling off at the moment. Call me a conspiracy theorist if you like. They've done it for 14 years. Can prove beyond a shadow of a doubt the manipulation in the silver market as well. So yeah, I mean, as long as you know what they're doing, it's not a problem, is it? It's actually better than having free markets, because at least you know what's going to happen, as opposed to trying to second guess it. We know that the market's going to go back to the all-time highs, and we know they're going to hammer silver today, because Bank of America's 800 million ounces, now 1.2 billion ounces of paper shorts, needs to get down to 23.50 by the end of today's session. And when we look at silver, you'll see they've already started on this for today, and of course by 1:30 they'll have achieved their objective. In economic news today, we've got not a lot. Just got core PCE price index, which is forecast to be slightly lower. The rest is superfluous, to be honest with you. And gold silver ratio, well, you can see what's happening here. It's already starting to move to the upside. That means that silver's being hammered and gold is pretty stable, and it's quite volatile actually. As you can see there, it's moving up and down quite briskly, which I'm surprised by. I don't normally see that sort of bouncing around. So yeah, today silver's going to get absolutely crushed, so that the Bank of America can make sure that they meet with it, or their position is within the OCO rules and regulations. Anyway, let's move on and have a look at the Dow. I'll just come back to that in a minute. So I'll just find the Dow chart for you. I thought I'd already up and running. It will be here somewhere. There we go. Too many charts, that's the problem. Right, so yesterday we could see that the Dow actually sat on the 200 MA in the daily chart, came down to it in the afternoon. Classic, up before, then down. Sat on there, then moved off it with probably assistance from the plunge protection team. We need to take out the 89% retracement to trade up to this high to the left at 35.859. But the market fairly quiet at the moment, but watch that 200 MA and the 5 MA if the market has a bit of a downer to start with. In yesterday's 30-minute chart, I'll just drag the chart over, you can see again that classic move the market up, then they bring it down, then the plunge protection team come in and bring the market back. At the moment, heading back down to the DP and also the 50 EMA, and the 20 bar moving average has just been taken out. So short in the 30-minute at the moment, the DP and the BRN, which would be the support to the left here, needs to hold in the Dow in order to be able to move back to the upside. In the German DAX, we have this market also sideways for yesterday, bit of a down day as the market traded up towards the 78% retracement the day before. 5 bar moving average actually holding at the moment, and we've got to get back above that 50 EMA also in order to move back to the upside there. In the 5-minute chart for yesterday, the market was down in the pre-market session, having been overbought in the pre-market session. Traded up to the 200 MA, then went short and continued short all the way through. We had a bit of a bounce at the sort of mid-morning. Then we had this shakeout. This was again about Russia-Ukraine. the market then just got into a sideways range, and if you look at the 30-minute chart, you can see exactly what I mean there. The market, that bit of a bounce, and then down we went, and it stayed in the sideways range of around 80 points. Bit of a shakeout towards the close, and then the market being brought back. Well, say the close, that's the close of the Dow, and then the market being brought back up on the overnight. But the DP is showing some resistance for this market at the moment. We're heading back down to an oversold situation there, where we could see some support probably at yesterday's close. And in the yen, just bring that back. And in the yen, we can see we had a lot of volume again yesterday, trying to bounce now in the daily chart. Bit of a pullback going on there, isn't there, at the moment? Let's just put some, there we go. We had this drawn in yesterday. I obviously forgot to save it, so let me just save this. So 38% retracement held well yesterday. And in order to move back to the upside, we need to see a bounce off this, and these would be the upside targets for the yen pound there. Let's have a look at the 30-minute for yesterday. Sideways for a while, but eventually breaking to the upside. Then we became overbought. You can see the 89% retracement there, and then back down. But fairly quiet day yesterday. Bit of movement overnight. The market became overbought, and then has traded back to the DP and the close, and also a lot of support here to the left as well, which this market is also showing at the moment, which is very, very useful. So watch out for these areas, the DP. If you want to see this in a bit more detail, it may be worth dropping down to a smaller time frame. I don't have the GBP JPY in a smaller time frame currently loaded. I do with the pound, but what you do is go down and have a look at the DP in a bit more detail, and then use that to time the trade. In the pound, the market sideways that we can see here at the moment, as prices are closing back below the 5-bar moving average, so likely to see another move to the downside. I know that the dollar index was also starting to move up as well. In the 30-minute pound yesterday, the market moving up until it was overbought with a lot of divergence en route to the upside, that then eventually gave way, came back to the close, and now below the DP. So very important this market holds at the next BRN, where there was quite a cluster of volume to the left, and the previous day's DP there as well. So could see a move to the downside and then a bounce to the upside, but that's dependent on what the dollar does. Let's just have a quick look at the dollar. We'll come back to silver in a minute. The US dollar at the moment, is attempting to move to the upside. They're going to try and bring this back today to assist with the silver manipulation as well to the downside. So don't be surprised if the market bounces off this area. I'm just going to draw in some fibs there. We're back to 38.50. We can see we're back to 100% more or less off this level here. So again, on the upside, just to watch out for resistance in these areas here. So I'll just save that for tomorrow as well. Meanwhile, in Silverland, I see the market's already being pressured to the downside. We will break the 50 EMA, and we will go down to the 200 MA, because Bank of America, as I said at the intro, needs to report its position today, last month of the quarter, to the OCO over the counter. And we'll see. It doesn't really bother me, because I'm already waiting for it. Got an order placed. I told you about it yesterday, that I had one down. You can see it was for the 29th, and yesterday was the 30th. I already anticipated that they're going to do this and try and bring the market down. So yeah, feel free, not a problem, because we bounced so well off this on Tuesday that I wouldn't be at all surprised to see this retested and then they can buy it back. I thought it was odd that the volume was really low as well on Tuesday. Very odd, because you'd expect volume in this sort of region when you get that sort of $1 drop and then bounce back, but we didn't get it. Very strange. In the 30-minute chart, you can see what they've done overnight. They've managed to hammer the market down to the S2. This will break and will go down to the S3 and down to the 24. It's only 50 cents away. It's not as far as it actually looks. So this is the target of where they're likely to take the market. And you can see that it's also Tuesday's low as well is in there at 23.94, which is why I've got an order sitting down there. Now, if they don't hammer the market down, then I'll be very surprised. But for me, it's a bit of a given that they're going to do that. Gold is down as well, but nothing like silver, which is why, again, if you go back to the gold-silver ratio, you'll see this moving to the upside because silver's being hammered more than gold. It's losing its value quicker, I suppose, is the way to look at it. And finally, Brent moving back to the upside, despite the protestations of Biden, who's talking about releasing 1 million barrels a day from their reserves. Let me just tell you something. They haven't got any. It's all rhetoric. So the crude oil market is actually proving that. And if you go back to yesterday's crude numbers, so you'll see they were minus 3.4 million. So there's a shortage or a big draw on crude oil there as well. So again, this is probably a truer reflection of Biden's words. Okay, that will do it for this one. Let's see what happens today. It's going to be an interesting one, actually. I'll be sitting here with bated breath waiting to see if they do manage to hammer down the price of silver. And like I say, we'll report back tomorrow. So, as ever, thanks for watching. See you in the next one.